we're officially a mess. All right. We are covering, it's December, and we know how CAR is, our California Association of Realtors. They like to adjust our forms and update our forms in December, which is just, I think it's just mean. I think we're trying to finish off the year, and we're trying to, like, have holidays, and then people want to write offers in the middle of that, and then all of a sudden you open it up and it's a whole different form. So I think that's mean. And then the other one happens in June. I think that's so mean, because that's like in the height of season, and you're like busy and trying to knock things down and have multiple transactions all going at the same time, and then they change up the forms. So I think if I had my pick, I would say, hey, let's change the forms updates. Let's make it like March and let's see, March, April, May, June, July, August, September, March and September. That would be good. But I'm not in charge. So we have December updates. So these updates, number one, it's still a little early in the month, so they might change. And they go into effect. You should see them in your CAR Forms library or your zip forms on the 18th of December. Okay, so 18th of December, these new changes go into effect. There are a lot of others. We're going to cover them this week and next week. I probably have, I don't know, there's probably 20 forms that were updated. A lot of the updates this time were very minor updates, which everybody sighs the sigh of relief and says, thank you so much. But there's about 20 forms. So we'll try to get through like half of them today, and then we'll cover them half of them next week as well on Tuesday. So we'll follow up. And of course, this will be recorded. So the first one that we're going to cover is our BHIA, which is the only new form that they're adding this year. So this is a brand new form, BHIA. It's the Buyers Homeowners Insurance Advisory. I believe, based on what it says in the updates, that this is going to be tied into the purchase agreement. So your residential purchase agreement, this is going to be one of those added on to the end of that RPA. Because we didn't have enough forms to sign already with the RPA advising buyers about their homeowners insurance, because we're finding it more and more difficult to obtain homeowners insurance in the state of California. The top of this form, number one, importance of obtaining property insurance. If the property you are purchasing is destroyed or damaged due to natural disaster or accident of some other event, insurance may be able to help with the cost of repair or rebuilding. In the absence of property insurance, the homeowner would be responsible for the full expense. If the property is purchased with a loan or refinance, the lender will require an insurance policy protecting its interest. Insurance policies can cover damage due to one or more of the following: fire, flood, earthquake, and other causes. The policy and insurance broker should the policy or an insurance broker should be consulted to determine when coverage applies and whether a supplement or rider can be purchased to provide additional coverage, or if a separate policy is necessary. Thank you. I really appreciate you, the California Association of Realtors, for describing the purpose of property insurance so that people know and understand, right? Because there's so many different types of insurances you can get. Property insurance, super important. Number two, and as always, I do have the chat box open, or you can just unmute yourself. You can raise your hand. You can just interrupt me and let me know if you've got a question. Property insurance and purchase contract terms. Your real estate purchase contract may contain a contingency that gives you the right to legally cancel the agreement within a specified time if you are unable to obtain or afford property insurance. This cancellation right may be part of an overall investigation contingency, or maybe a specific contingency pertaining to insurance. If the buyer waives or removes the applicable contingency before determining the availability and cost of property insurance, buyer is acting against the advice of a broker. So please keep that in mind. Make sure before you remove those contingencies that your buyers have insurance in place, that they've investigated it, they know who they're going through, they've priced it out, they know they can afford it. And that they've submitted it to the lender, and that the lender also says that they can afford it, right? Because that's going to come into play as well, because it all factors into their what they're qualified to purchase and the cost of their insurance. California's property insurance market. Number three, some insurance carriers stopped using new property insurance policies, and others are limiting the number and location of new policies. These changes may affect both the availability and cost of insurance. However, over 50 insurance carriers are admitted to sell property insurance in California, so it may be possible to obtain insurance even if some carriers will not write a new policy covering the property you intend to buy. An insurance broker may also be able to find a non-admitted insurance carrier offering to insure the property you intend to buy. Because locating an affordable insurance policy could take time and effort, buyers are advised to make all insurance inquiries as early in the home buying process as possible. If you paid attention to our buyers training that we did couple months ago, that was part of my intro email that I send the buyers as soon as we get an accepted contract. I send them, hey, make sure you get your insurance policy in place, right? Day one, that's what I'm telling them to do. So please make sure you do the same with your buyers, because we all expect them to read every form that's attached to that residential purchase agreement, but chances are they probably didn't. So make sure that you touch on some of these points. These are really important. Number 4, usually on these forms updates, the 4 means that it's new. But this whole form is new, so I don't know why this section is red. It will not be read on the final version, just so you know. Insurance conditions. Many insurance carriers impose physical condition standards before issuing a policy or reserve the right to cancel policies even after they are issued if certain minimum standards are not confirmed in an inspection or otherwise. Physical condition standards could include, but are not limited to, prohibition of knob and tube electrical wiring, requirements related to plumbing or piping materials, standards related to the age and or quality of the roof or foundation, minimal safety standards related to handrails, tripping hazards, and defensible space requirements. In Idaho, just so you know, I had problems getting insurance on our current property because there was a wood stove in the shop. It's really common out here. Wood stoves are how we use to heat the majority of our properties, and they have them oftentimes in the shop, but insurance carriers did not like that. There could be chemicals out there that could explode, and you've got flammable liquids with a fireplace. So anyways, there you go. All sorts of random things can prevent you from getting insurance. Number 5 is resources. The California Department of Insurance, the DOI, maintains a website addressing residential home insurance. Resources on the state government web include the top 10 tips for finding residential insurance, residential insurance company contact list, home insurance finder, and information on other insurance issues. This webpage also includes information on how to contact the DOI and suggestions on what to do if you cannot find insurance. The webpage and link to other documents is located at insurance.ca.gov, and then it's got some extra stuff there on the end. So those are the resources. Number 6 is your broker recommendation. Buyers advised to explore the availability of property insurance options early in the home buying process and to consult with a qualified insurance professional of buyers choosing to understand insurance availability and cost prior to removal of any related contingencies. Real estate brokers do not have expertise in this area. By signing below, the buyer acknowledges that the buyer has read, understand, and received a copy of this buyer's homeowner's insurance advisory. So again, I believe this is going to be attached to your residential purchase agreement. Does anybody have questions regarding the buyer homeowners insurance advisory?
Amy, I was searching for the form BHIA.
It's not going to be in your zip forms library.
Oh.
These aren't released until the 18th of December.
Well, then that makes it explain.
Yes, the rest of the forms, because this one's brand new, so this one will be released on the 18th. The rest of the forms will be in there, but without the updates, because all the updates go into effect on the 18th, but that's why you couldn't find it. Keep in mind that you should have like 3 insurance people that you can refer your buyers to. I usually recommend always sending them to whoever insures their auto policy first, because ultimately they can usually get a multiple policy discount, assuming their auto insurance carrier also offers homeowners insurance. But other than that, I would recommend you have 3 contacts to refer your buyers to for homeowners insurance. I would highly recommend that they be insurance brokers, okay? Not insurance carriers. So what's the difference? Like oftentimes your name brand insurance carriers, your State Farm, your Farmers, whatever it is, they underwrite their own policies. So that's what they offer. Insurance brokers, right? It's the same idea as like going to a bank to get pre-approved versus a mortgage broker. A mortgage broker can go to multiple banks and see which one fits them best. Insurance brokers can go to multiple insurance carriers to see which one can offer the best coverage for the best price for your clients. They're going to be able to find those companies that are offering insurance in areas that it might be difficult to find. Okay. So insurance brokers, locate some, create relationships with some, right? We talk about this almost every week about creating relationships with vendors. Please do it so that you have those to refer out to. All right. Any other questions on this before we move on to our next form? Okay, this next one I'm going to try to drag all the way down onto my page. Look at that magic. So I can actually get rid of it when I'm all done. This next form that has an update is our for your protection, get a home inspection. It's the HID form. We recently covered this on our transactions or our forms update a couple weeks ago, probably 3 or 4 weeks ago now. We talked about this form because most people don't even know it's supposed to be included. When you click the little box on your form for the FHA loan, you should get a bundle now that attaches, which has the for your protection, get a home inspection, and the FHA VA amendatory clause that talks about the fact that the property has to appraise at contract price. Okay, so this one will be updated. As you can see, when we look at it, there's a lot of red on this page. They changed the whole form. Okay, the whole form has been changed. So why you need a home inspection. Buying a home is probably the biggest investment you will ever make. The purpose of a home inspection is to inform and educate you about the property before you make a financial commitment. A home inspection will give you more detailed information about the overall condition of the house you want to buy. Be an informed buyer. A home will only occur if you arrange for one. FHA does not perform home inspections. For a fee, a qualified inspector will take an unbiased look at your potential new home to evaluate its physical condition, estimate the remaining useful life of the major systems, equipment, structure, and finishes, and identify any items that need to be repaired or replaced. If you request an inspection early in the process, you may be able to make your purchase contract contingent on its results. What's included in the inspection? To better understand what to expect in the home inspection, ask the prospective inspector for their standards of practice, SOP, or for a sample home inspection report, right? If you're shopping home inspectors, you could ask for that. How to find an inspector. To find a qualified home inspector, ask for references from friends, real estate professionals, local licensing authorities, and organizations that qualify to test home inspectors. Appraisals are not home inspections, exclamation points. Trying to drive this one home. An appraisal is required to estimate the home value for your lender and does not replace a home inspection. The FHA does not guarantee the value or condition of your new home. If you find problems with your home after closing, FHA cannot give you or lend you money for repairs, and FHA cannot buy the home back from you. Radon gas testing and other health safety issues. The Environmental Protection Agency and Surgeon General recommend that all houses be tested for radon. For more information, call the toll-free National Radon Information Line, 1-800-SOS-RADON. Ask your inspector and additional health and safety tests if additional health and safety tests are relevant for your home, such as mold, air, or water quality, presence of asbestos, lead paint, or urea, formaldehyde, insulation, or pest infestations. We acknowledge a receipt of this for your protection. Get a home inspection, and the buyer signs off on that. Okay, this is required, like I said, for FHA transactions. Okay, any questions about that? There were a lot of changes on that form. Again, like the whole form was changed. Any questions? They simplified it down and made it a little bit more easy for a buyer to understand.
Amy, so this form is currently out, right? It's just been amended?
Yeah, this form is currently out. It just looks a lot different. So they're just made some changes to this one this year that will go into effect on the 18th.
Thank you.
Absolutely. And again, if right now you log into Zip Forms, you write in an offer on an FHA property, you check the box for FHA on your residential purchase agreement, it's going to automatically add into you to your transaction the HID and the the VA FHA. I can't think of what the acronym is for that one, but it's the VA FHA amendatory clause. So it's going to add the bundle to your package for you. So you still have to go down and select it to edit it and send it out for signatures, but it will include both of these forms. The VA FHA amendatory clause needs the purchase price put in there, but other than that, they just get signatures. Okay, so for your protection, get a home inspection updated. Let's see here. We got that one. Hold on, I'm just looking for the other. Oh, here, let's add this one in. This is our AOAA form, which is the assignment of agreement form. This is also one that we've covered more recently. So this is when we're going to add a buyer to a transaction. Maybe your buyer didn't qualify for them by themselves, something changed, you would add a buyer. Or sometimes we do what we call wholesaling. Okay, really popular in the investment world. You got an investment contract on a property to buy it, with the intention is that the price is low enough, they're going to turn around and sell it to somebody else and give them the contract for the purchase for $20,000 to $30,000. Oftentimes, sometimes more, sometimes less, but they're going to assign that agreement to somebody else and they're going to make money off that assignment. So that's what wholesaling is. Down here, it just at the bottom, consideration for assignment. This is something that has to get disclosed as part of the assignment. It gives you the options of A or B. A was buyer has received or will receive consideration from assignee in the amount of blank. B is, it used to just say buyer has not received any monetary consideration from the assignee for this assignment. Okay, they've updated it to add that the buyer has not received and will not receive any monetary consideration. Super important, because technically, if I'm not lying if I check the box, the buyer has not received any monetary consideration from the assignee. But it's saying that now or in the future. So you need to disclose if the buyer is going to receive any monetary consideration now or up to the close of escrow for the assignment of the agreement. Okay, that was the only change on this form. They just added that really simple verbiage. Any questions on that? And again, this form gets used for adding, moving a buyer, or assigning the whole contract to somebody new. All right. The RPA, this isn't going to be a good example of it, just for the record, but I'll show you. Anyways, the RPA is getting a small update, which I'm so excited about, because normally this gets a whole bunch of updates and it takes us a while to like get our feet back underneath us. But if you open it in zip forms on Q2, this report here, there's a drop down. And in that drop down, it's going to add in the it's going to have a Fortress Fire Wildfire Disclosure Report. So a Fortress Fire Wildfire Disclosure, it's a tongue twister. Fortress Fire Wildfire Disclosure Report. I'll never say it. All right. Anyways, so in 10A, there will be a drop down here. In that report, you'll have the option to select that. Why is that important? If the property's in like a high or very high fire hazard zone, you may want that Fortress Fire Wildfire Disaster Report. Okay. Or it could be, like if the property was in a previous fire, I'm going to have to do more research on what the Fortress Fire Wildfire Disclosure Report is. But you can request that gets included as part of the transaction. Okay. So that's going to be the only change made to the residential purchase agreement. Nothing major there. Okay. Any questions about that change? All right. Moving right along. The next one comes on the residential listing agreements, our RLA form. So this past year, we've had this phenomenon happening where people go to sell their properties, and there's been shady companies that have come along and had them sign listing agreements previously that lasted like 5 to 10 years that were recorded against the title of the property. Okay. It was shady. The way that it was gone about was not fully explained to most sellers. And so it was a mess. Anyways, people would go to sell, they get in contract, preliminary title report gets pulled, and then there's this lien to whoever it is for commission on the sale of that property. Okay. So they've updated the listing agreement here, the residential listing agreement. And remember, we should always use the exclusive authorization. Yeah, I think, Rebecca, I think you're right. It was something about they gave some money to the sellers to sign with them, but then they held the lien against the property. But it also went on for like years. So it was weird. Anyways, they're updating it here. that the maximum listing period allowed by law for residential property improved with 1 to 4 units is 24 months. This restriction does not apply if the seller is a corporation, LLC, or partnership. It is unlawful to record or file this listing agreement or a memorandum or notice thereof with the county recorder. So, right, so they're limiting you to a 24-month listing agreement. And then also letting you know that you can't record it against the title of the property. Okay, so that is the changes made to the listing agreement to prevent that from taking place any further. And if we extend the listing agreement beyond that 24 months or whatever, if we have a listing agreement in place, we go to extend it. I'm just double checking that was the only change. I believe it was. You can only extend it up to 12 months. So we'll see that. I think there's like an extension of time addendum. Oh, I just saw it. Look, there's more check marks. They just reordered something down here. There are different strategies down in the presentation of offers. This was something that was added to the listing agreement, I believe, back in June, this portion of it, but they've kind of renumbered it. So section 1 is there are different strategies for obtaining the best offer for the seller. The seller is advised that certain buyers may prefer to not be in a competitive situation and either may not make an offer if there is an instruction that all offers will be presented at a later specified time, or may try to make a preemptive offer that will expire in the hopes the seller will accept before the presentation date. Seller is advised to discuss and consider the best strategy for the seller. So that got labeled as number 1. 2 is the seller instructs the broker to, or 2A rather, is seller instructs broker to present offers. Broker agrees to present all offers received for the seller's property and present them to the seller as soon as possible, unless seller gives broker written instructions to the contrary. So if you change this, if you left it on the default, that is the default for presenting offers. It's as received. If you're going to review them on a specific date, the seller's like, oh man, I'm going to be out of town, then you would need to do a modification of terms, an MT form modification of terms to change the presentation date so that you have it in writing. Barry's will not ask for it, but I will tell you if the property is listed in Metro List, they will ask for proof of the offer review date that it's in writing. All right, so 2A. 2B, so 2A is the default, 2B is the other option. You would check the box. Seller instructs broker not to present offers until a later time. Seller has elected to have broker hold all offers and present them to seller on blank date or blank days after the property is listed or as active on the MLS. Broker and seller may need to amend this time by agreeing in writing. Broker will inform seller that an offer has come in, but will not submit the offer to the seller unless specifically instructed otherwise in writing. Local MLS rules may impact this practice and whether it will provide any benefit to the seller. So they just renumbered that. That information was there previously. They just broke it down a little differently in the numbering and letter system. Okay, any questions so far about this RLA?
I have a question, Amy, on the first thing you're talking about.
Yeah.
So if I get a listing, it's still a valid situation that somebody signed this 2 years ago.
If you had a listing and you did not cancel the listing agreement, you still have a valid listing, depending on what you put as the, up here, it's got a beginning date and an end date on section 1. So
no, if I'm getting a new listing, and then it comes out that they had listed the house 2 years ago and it's still on this on their contract.
If they had listed the house 2 years ago, let's say they listed the house 22 months ago, the previous listing agent had put a 24-month listing period on here. Most people don't put 24 months on a listing period, but let's say they did. Yes, then they still have a listing agreement with that previous agent if it wasn't canceled. Of course, it can be canceled. So you can withdraw a listing from the MLS and you can also cancel a listing agreement. So if it's canceled, it's canceled. But if it's not canceled, then absolutely, whether it was, you know, a 6-month listing period or a 2-year listing period, if it's still within that contractual time, then the other agent has the ability to collect the commission on that sale.
Okay.
Okay. Rebecca asked the question that if we have a modification of existing terms, can we extend beyond the 2-year mark? So yeah, if we had a 24-month expiration date on here, we're up at like 23, 24 months, and we want to extend the listing agreement, you can extend it for an additional 12 months each time. Yes. Okay, so those are your updates to your residential listing agreement, your RLA. There's not too many major updates this winter, which makes me happy. All right, our next one is our request for repair form. There's some minor changes there, so I'll show you that, and then we'll talk about the RR. Your request for repair number, you put in the number in there because you might have multiples. The change that was made is down here on the seller response. Okay, seller response down here on 1B. It used to say something like partial seller, and then you would have seller agrees to all of buyer's requests except, but now they've updated it. The seller only agrees to the following. Okay, so partial agreements is you have to spell out what the seller agrees to. This actually makes it a little easier because you have a few more options here where you don't have to go to the RRRR form so quick. So seller only agrees to the following. You can check all that apply. Seller agrees to all of buyer's requests except, so if we check this top box, then we're agreeing to whatever the buyer wrote up there except the following. They will not do the following. Number 2 is seller agrees to credit buyer X number of dollars at close of escrow. Number 3 is seller agrees to modify the purchase price. The revised purchase price shall be blank. And 4 is other, because you know how we like our other lines. So if the buyer asked for something to be done and the seller was said, hey, we'll agree to some of it, and then I'm going to give you a credit for the other stuff, and maybe the buyer didn't ask for a credit, you would go partial here. You would check the box for seller agrees to all of buyer's requests. Now, this is only what the seller is actually going to repair. So anything that they're not physically going to fix before the close of escrow goes on the accept line. Okay, we're going to fill in what they're not going to do there. And then we would check the box for seller agrees to credit buyer $500 at close of escrow, right? So that would be, hey, we're willing to fix this and we're going to give you a credit. Or, hey, we're willing to fix this and we're going to revise the purchase price. Keep in mind, too, that buyers can only receive a credit for a certain amount. Usually that is the total of their closing costs. If the credit that we're getting from the seller exceeds their closing costs, oftentimes the remainder of that credit goes right back to the seller. So it's lost money. So if we already have a $10,000 closing cost credit negotiated into that contract as part of the actual contract itself, and then the seller's offering to give buyer another $10,000 towards repairs, that's probably going to exceed the buyer's closing costs, which means that the buyer's not going to be able to receive part of that credit. So we may really want those repairs done before the close of escrow, or you may want to like reduce the price $10,000 and keep your $10,000 credit, or reduce the price $5,000 so that you don't have you don't lose any money. Okay, clarification, because Rebecca asked a question about how much are closing costs for cash deals. Rebecca, if you get a credit from the seller for more than your closing costs on a cash deal, it doesn't matter. You can get more of a credit from the seller, but you're better off on a cash deal actually just doing a price reduction, okay, instead of a closing cost credit, because it's cash. The seller or the buyers are coming in with all cash. So it's better to reduce the purchase price on a cash deal, because ultimately like your property taxes and stuff are going to be based on that purchase price. So it's better to reduce that and pay the closing costs than it is to get a credit towards your closing costs and pay a higher purchase price. That being said, on a cash deal, your closing costs are probably going to be pretty close to like 1%. Okay, you're really just looking at title, escrow fees, depending on where the property is located. If it's typical, the buyer pays for those, some recording fees, a notary. And that's really typically it on a cash deal. So it's usually kind of like $500 in random fees and then title and escrow fees. So you're looking at maybe 1%, maybe like $5,000 max. It's probably closer to like, it's probably less than that. So $5,000 is probably max for like a cash deal. On your finance deals, your closing costs are going to run between 2 and 3% of the contract price for the most part, because now you have lender's fees. If you're setting up an impound account, in fact, with your lender, then you've got your prepaids of you're going to pay for your insurance a year in advance. Same thing with cash. Oftentimes you pay that insurance through the close of escrow. Sometimes they don't though. But with finance, you pay the homeowner's insurance for the first year. Then you put a couple months worth of insurance into reserves. You're going to make sure that property taxes are current for whatever portion the buyer's responsible for. And then they're going to require to put a certain number of months in the reserves as well. You're also on a finance deal going to pay that interest from the date of the close of escrow through the end of the closing month as part of your closing costs. So in addition to your normal closing fees that you would have with cash, those are kind of your additional fees that you have with a finance deal, and then your appraisal costs associated with that as well. So that's kind of what you have to look forward to. Any questions on this request for repairs, this RR form? All right. In addition to the RR form, there were also some updates made to the RR form, which is the seller response and buyer reply to the request for repairs. In fact, hold on just a second. Let me shrink this down so I can find it again. But see, when we have our repair request right here, buyer signs saying that, hey, we're making this request. The seller has a couple of options here. Number one is seller agreement. They either agree to all of the buyer's request. They could do a partial agreement. There might be additional conditions. So, hey, we might agree to all of the request or some of them, but here are the additional conditions. They need to like remove the contingencies on the attached CR form. And we have the expiration, right? But so that's the seller agreement. Seller responds to buyer's request on the attached CAR form RRRR, right? So we've got either seller agrees or seller is just going to respond on this other form. Or buyer's requests are not incorporated into the agreement. Seller responds to buyer's request on the attached amendment to the existing agreement, AEA. No seller signature is required on this RR. So let's say that the buyers just asked for a credit for repairs, right? Maybe they just asked for, hey, we want a $5,000 credit towards repairs. Seller could check this box down here, number 3, that the buyer's requests are not incorporated into the agreement, and they respond on the attached amendment to the existing agreement, specifying that, hey, sellers give buyers $5,000 towards buyer's closing costs. And then seller doesn't actually have to sign the repair request. And then you've got seller does not agree to any of buyer's request. Wah, wah, wah. Okay, now I'll tell you with the changes here on section 1 that we already discussed, we're going to see the RRRR a lot less often, because oftentimes it's a partial agreement. It's like they're offering a credit and some repairs or whatever it might be. Now we have the ability to really expand on this RR form. But in case we do go to the RR form, that would be this form here. There was a few changes made to this form as well. This is the seller response and buyer reply to request for repair number 1 or other action. It just, instead of saying seller agrees to the following, now it says seller only agrees to the following. Okay. This is saying that, hey, it doesn't matter what was on this other form. This is what the seller's agreeing to. We have the same options here as we had on the RR form now. So like I said, I think we're going to see the RRRR a lot less often. Here are the seller conditions down here. This kind of specifies a little more clearly, right? Seller's agreement only applies if buyer removes the investigation contingency, paragraph 3L3 and 8C, except the following blank. By signing and coming to an agreement on this RRRR, or you've got buyer removes those contingencies identified on the signed contingency removal form attached to buyer's request for repairs, or buyer removes the contingencies identified on the contingency removal form by signing and delivering it within the time specified in 3A below. Buyer releases seller from any loss, liability, expense claim, or clause of action regarding the disclosed condition of the property. So that's the release, right? So it's just saying that, hey, by signing and coming to an agreement on this RR, right, removes the investigation contingency. Okay, so that's what that is. It's saying, hey, the second we sign this and agree to this and return it, we're removing the investigation contingency unless one of these other boxes is checked by the seller, which is they remove the contingencies identified on the original CR that was included with the repair request, or option 2 is buyer removes the contingencies on the attached new CR form. And then the seller, the buyer removes seller from any loss, liability, expense claims. Okay, so those were the changes that were made to the RR form, or the RRRR form, the seller's response and the buyer reply to the request for repair. Y'all confused now? I'm confused. There's so many R's. Okay. We're going to move on to the next form, which is our WHSD. This is the water heater and smoke alarm statement of compliance. They updated it with smoke alarm. I think before maybe it was detector. And then Rebecca had a question on the previous form asking if we attach the inspection contingency removal, can we do that with the same form? Yeah, so on the, hold on, we'll come back to this one here in a second. Oh, hold on, I might have shrunk the wrong one. All right, on the original repair request, just so you know, up here, so when the buyer makes the repair request, they have the ability, if seller agrees to all of buyer's requests or some of the buyer's requests and the buyer accepts seller's partial agreement below, the buyer removes the investigation property contingency. Okay, so as part of our original repair request, the default is that the buyer removes that inspection contingency. We don't actually even need to include a form. But let's say that you were removing not only the inspection contingency, but the appraisal contingency as well. Then you could say, hey, we're going to attach, the buyer removes those contingencies on the identified, removes those contingencies identified on the attached signed contingency removal form. Okay, so you can do that there. Keep in mind, this buyer's investigation of property condition is just the physical investigation of that property, basically. It does not include your HOA docs, your preliminary title report, your seller's disclosures. All those, remember, there's like 8 different contingencies now kind of tied in that used to be part of the investigation contingency. Those are all separate now. So oftentimes all those contingencies come due at the same time. The default just removes the investigation of property contingency. And so if we want to remove more at the same time, we would include an attached CR form. Okay. The reply to that then also allows the seller to either additional conditions, right? Seller's agreement only applies if buyer removes those contingencies identified on the attached contingency removal form. And then the new, I lost my toolbar to pull up the other one. It's not participating in the process today. So our new RRRR, same thing. If the seller agrees to just remove the investigation contingency, that's the default. But the seller could also include, like maybe the buyer just said, hey, we're removing the inspection, but the seller's like, hey, all your contingencies are due, so we're not agreeing to these repairs unless you remove the contingencies on the attached contingency removal form. Then you would attach a contingency removal form with like all contingencies checked. So, but the default means if we agree to this, either on the buyer section or the seller's section, the default is that the buyers are removing their investigation contingency with the agreement to any repairs. And you don't have to include a separate form. Hopefully, Rebecca, that answered your question. But you don't need a separate form. You can use your repair request. All right. Going back to your WHSD, they've updated it. I don't know what the original term was, but I think it was water heater smoke detector statement of compliance. Now it's, yeah, in fact it was, because it's the WHSD. They should probably change the acronym now to WHSA, but it's water heater and smoke alarm statement of compliance. They just changed the verbiage. And this just says, hey, for use only for REO sales with exempt seller disclosures. So that doesn't mean that we only use this form for REO sales. It just means that we only have to use it with bank-owned sales that have the exempt seller disclosure. If it's a regular REO sale that doesn't require the ESD, then this form isn't required. But other than that, this form is required for most residential purchase agreements. We require it for any properties with 1 to 4 units, as long as the seller is obligated to provide us this information. So it just updated that. And then down here, the smoke alarm. And then they just changed alarm from detector throughout the statement. So that was the only change made to this form. So it's your water heater, that your water heater has to be double strapped, and smoke alarm statement of compliance. So as a reminder, your smoke alarms are required in the state of California in each of the bedrooms and in the hallways leading to those bedrooms. And if the property has more than 1 level, you need a smoke detector on each level, even if there are no bedrooms. Okay, so in each bedroom, the hallway leading to the bedrooms, and on each level, even if no bedrooms exist on both levels. Any questions about the change to alarm from detector on the WHSD. Our poor new agents are going to be like, why is it a WHSD? This doesn't make any sense. Okay, fail. Hopefully maybe they'll catch that before they update the form. All right, our next form that they updated was the WCMD, which is your water conserving plumbing fixtures and carbon monoxide detector advisory. Okay, WCMD. It's a water conserving plumbing fixtures and carbon monoxide detector advisory. They updated it with advisory. I don't know what it was before. And that was the only change. They also updated the health and safety code. And those were the only real changes that were made. By signing below, buyer and seller each acknowledge they have read, understand, and received a copy of this water conserving plumbing fixture and carbon monoxide detector advisory. So it's got buyer's and seller, buyer's signature line and seller's signature line on this form. Okay, so minor changes there to that form. Any questions on any of those forms so far? Keep in mind too, there are a lot of other changes. Again, we're going to cover some more changes. I think that's probably all I'm going to cover this week. I was just looking at the list. RPA. There were a lot of other changes made to some forms. I'm not covering the commercial forms. I'm also not covering, or the commercial related forms. I'm also not covering the short-term rental forms or the tenant occupied forms. Well, as far as the like lease forms, because those aren't things we typically cover in our office. So I'm not going to cover those forms. I'm just covering the ones that you guys are going to interact with on a regular basis. Well, I'm just going to open up. Oh, no, we're not going to worry about that one right now. Let's see. Here, let's look at this one. We have the SPRP, which is the seller's purchase of replacement property. There's some changes moving on this one as well. So keep in mind that if the seller is going to purchase replacement property, we want to have this SPRP in place at time of accepted offer, because this is what gives the ability for the seller to cancel the transaction if they don't find or close on that replacement property. So they've added some verbiage here on the top section, which is the finding replacement property. The agreement is contingent on the seller entering into contract to acquire replacement property or identifying suitable property to move to. Finding replacement property contingency. Seller shall, within 17 days is the default. You can change that after acceptance. Remove the finding property contingency or cancel this agreement. Seller shall deliver to buyer at time of removal of the finding replacement property contingency proof of replacement property, either a copy of the contract for purchase of replacement property and the contact information and escrow number for that purchase, or a signed lease or rental agreement for replacement property or other written evidence of replacement property. Okay, so they've said that not only do we remove the contingency, but we have to provide proof. Okay, if there is some. Keep in mind that finding replacement property, notice here it says that, hey, not only do you have to include that purchase agreement, but it could be a lease or rental agreement for replacement property or other evidence of replacement property. So if your sellers are selling a property and they decide they want to, maybe they're selling it to rent, but they don't want to be homeless, the purchase of replacement property could be for a leased property as well, just that they can find a rental to move into. Okay. C down there also had some changes, which is close of replacement property. So the first one is just finding the replacement property. The second option for this contingency is to actually close on the replacement property. That's C. And there was a change there. The agreement is contingent on the seller's ability to close escrow on replacement property according to that contract. This is a contingency in favor of the seller. Seller is scheduled to close escrow. Seller, by the scheduled close escrow date for the replacement property, shall either close escrow or remove this contingency in writing. Okay. And then some other verbiage was added down here on number 3, which caused everything else to get renumbered. The cancellation of replacement property was added. If seller's replacement property is in or enters escrow, or there is another agreement and either party to that escrow or agreement gives the other notice of cancellation, seller within 2 days thereafter shall deliver to buyer written notice of that cancellation. Okay, because ultimately, if it was entering into contract and close the escrow, that gives the seller the right to cancel. Number 4 got renumbered. Number 5 got renumbered. Then they added number B, which is the buyer's right to cancel. Buyer may cancel the agreement in writing as follows. After first giving seller a notice to seller to perform, if seller fails to remove the finding replacement property contingency, and that's dependent on the date up there on section 1. B is new. After first giving seller a notice to perform, seller fails to give proof of replacement property as specified in paragraph 1A. So not only do they have to say, hey, we're removing the contingencies, but that proof is part of the contract. Your buyer gets a copy of your purchase contract. 5C remains the same, which is if paragraph 1C is checked. After first giving seller a notice to seller to perform, seller fails to remove the contingency of the closing of replacement property contingency. So that 1C is up at the top section. And then D is also new. If seller gives notice to seller of either party's cancellation of the agreement for replacement property. That's from the other property that their replacement is. And then E just got renumbered. And this also, because we added 3, then we had to renumber this to 6. And then everybody signs. So any questions on the seller's purchase of replacement property and the changes that were made to that form? All right. That's all I'm going to cover for you guys today. Next week on Tuesday at the same time, we're going to pick up and cover the rest of the forms that you're going to see introduced on the 18th. Make sure in the chat box, there's a place to log your attendance on that attendance form. You can also make suggestions for trainings that you would like to see in the future as we get ready to put together our new calendar for the first of the year. And remember, there's no training tomorrow. I'm taking a day off, mainly because I have to, not because I want to. And then on Thursday, we return back. We'll be talking about lead generation and the importance of that and the different types of lead generation. If you have any questions with regards to lead generation, that's a good time to come on and ask those questions. But that is it for today, unless anybody has any questions or needs anything before I wrap up. You are welcome, Rebecca. Thank you. You're welcome, Mark, as well. Thanks for joining me today. I really appreciate it. It's always fun when I don't have to teach myself. You're welcome, Deborah. Thanks, everyone, for joining. And we will, hopefully you found this useful. We will see you on Thursday for lead generation.